Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we got brand new weekly data
Woohoo!
for Las Vegas real estate market. We're going to go through it here. So this is, we'll start with the market action index 41. Last video you did was 40.
Right.
It's up to 41. Now remember, this takes into account a bunch of information, right? What kind of stuff's it looking at?
So it's looking at the closings. It's looking at list price, median price, sale price. It's looking at days on market. It's really taking a comprehensive look at the whole market and coming up with this made-up number that somehow amalgamates all of this data.
There's some big words in there. Amalgamates. Okay, so 41 is the number. It was 40 last week. It was 39 a month ago. Now, yes, during COVID, it was a huge number, the 2 COVID years, right? Mm-hmm. Because but it's still a seller's market, right? We didn't really see this the last housing crash. We had a buyer's market for about 4 years.
Right. So no, we didn't see these kinds of numbers. And as we get into the numbers, you'll see really the support for this. So you'll see exactly how they came up with this from the perspective of all the different metrics and what they're communicating.
Okay, so we're going to start with the first one here. This is the real-time market profile. This is the snapshot data. Now, this is 90-day data. This actually looks back 90 days. So this is smoothed a bit. Median list price, $525. It was $483 in January on the 20th. It's up to $525. In bad markets, why is this going up significant? Now, people are going to say, but Todd, anybody can list their price at house at whatever they want.
Well, anybody can, and people do. We call it optimistic pricing.
Okay, but if you're trying to sell your house,
right,
you try to list it at a reasonable price. Plus, the agents aren't just going to let you ridiculously overprice your house because...
Right.
Why?
So at the end of the day, the market will dictate your list price because, yes, you might have optimistic pricing when you first come on the market, but you'll get a reality check pretty quick as no one darkens your doorway. There are no calls. There's absolutely no interest whatsoever. So that communicates to the seller and to the listing agent that, hey, we need a price adjustment. And people continue to make price adjustments until they get to that sweet spot where there's interest in the house. So if no one's interested in the house, then it's the price. Once you get to market price or pretty close to it, now people are starting to show an interest in the house.
Okay, we're going to skip down to where it says price decreased. And as you can see that number, the top of that line at one point was about 70%. I mean, 70% of people had to change their list price. Mm-hmm. Less than half, 42%. This is actually an incredibly normal number. In most normal markets, about 40% of all people end up reducing their price, mm-hmm. 5, 10, whatever, $1,000. It's 42% completely normal market. So this idea that these list prices are fake and that people just drop their prices doesn't fit with the narrative. If we have 42%, and this is a dropping number, as you can see, there's less and less people having to drop their list price.
Right. So we are seeing people still drop list prices, but not in mass. And every once in a while, we see somebody actually raise their list price.
Median price of new listings, $500,000, highest this year. That's a weekly number. That's the last week. Mm-hmm. Price per square foot, $251, highest we've seen since probably last summer. Mm-hmm. That's flipped over. If you look at the trend there, remember each one of those little ticks is $1 per square foot. So it's basically, if you draw a line, it's trending up. Mm-hmm. Okay, which happens in the spring. Did this happen in 2006, 7, 8, or 9? Did home prices ever go up once during those 4 years?
Not that I recall.
No, they did not go up. We have some other charts. We'll do a whole video on this. We'll do a video where we compare 2008. And people always say 2008. It was actually 2006 to 2009 were the years where the market just tanked. Every month, month over month, we had a price decline in Las Vegas every month. We know this because we were listing we had about 600 listings between us. This is not our whole company. Our whole company had over 1,000. This was just us as agents because we had all the bank-owned listings. Mm-hmm. We had most of the bank-owned listings in Vegas, right? Mm-hmm. Okay. Average days on the market, has sort of started to turn the corner, but this median days on the market, this is the most important number. Median days on the market is the middle house. So that means half the houses are selling quicker than this. Average is misleading because if you have a house that's been on the market for 3 years, it's 1,000 days. And then if you have 5 houses that sell in a day and you average those, the average days of the market is 200, right? Mm-hmm. Because one house on the market 1,000 days, four houses sell in a day. So the average is 200. The median would be a day on the market because half the houses above, half below. That's the median number. So median's a better number here, 70. This is massively decreasing. I'm going to show you a chart that's going to blow you away that actually shows you, because this is a 90-day average. This includes 90 days ago, right? 42% of the time, we talked about that, prices decrease. Prices are increasing. 5% of the time, that's about normal. 4 or 5% in a normal market, okay? Inventory, every week. We actually have had 39 straight weeks of decreasing inventory. Is that incredible? That's another thing did not happen 2006, 7, 8, 9. We did not have just magically decreasing inventory. Certainly not 2,700 houses on the market.
Right. And this thing with decreasing inventory, it's kind of feeding on itself. And what I mean by that is the less inventory we have, the less people who would like to switch houses are going to be willing to put their house on the market because there's nothing for them to buy. So we're kind of spiraling towards zero inventory if people don't have an aha moment and go, you know what, I'm just going to take a leap of faith and put my house on the market and hope that somebody else on the other end puts their house on the market too for me to buy.
Yeah. Median rent, you can see if you draw a line, this is just going up. This is mostly inflationary, but what this also represents are discouraged buyers who have said, oh, I heard prices were going to drop, so I'll wait to buy, and interest rates are kind of high, I'll just go rent. And now you have an excess number of people renting. Want to tell them how our last rental that we put on the market, how long was it actually on the market, meaning from the time the tenant moved out until we had a new lease signed? How long did we have to wait?
We didn't have to wait at all, and we could have signed a lease before the previous tenant ever left, but we chose not to because we wanted to give the incoming tenant the opportunity to actually walk the property before he signed a lease. He was very willing to sign a lease and pay all the money before he ever saw the property in person, while the existing tenant was still in place.
So an hour, maybe.
Literally, an hour, because I just needed to get the keys and then go over to the house and meet him. That was it. Okay.
All right. Let's go to the next chart. Market Action Index. This is the same thing you saw before. The 7-day average is 45. Now, why is this number important? If you look at those two humps, it's like the camel, right? That was 21 and 22, the hottest markets we've ever had ever. That is not the normal market. That is not the normal baseline. People still want to compare May of 2022 as the pinpoint a normal market. Go back to the left. Everything you see 2020, 2019, 2018, much more of a normal market. As you can see, the Market Action Index, it is more of a seller's market today than it was in all of 2019, which was the last normal market. So if this is a collapsing, dying, the market is dying, look back. I guarantee you, I don't know that this chart existed back in the housing crash, but it would have been probably in the teens.
Right.
It would have been a buyer's market. Buyers have control. Buyers, we did not have multiple offers. We had multiple houses sitting around getting no offers.
Right. So the big concern here is this declining inventory, because at some point there's going to be a tipping point, right, in the other direction where inventory does climb. And, what will coincide with that? Our hypothesis is that we will hit this tipping point where interest rates are going down and inventory comes back on the market. So that's going to be the moment where buyers come back in. And that'll be an interesting dynamic to watch, because while we do not foresee values tanking, we do see the possibility of a renewed frenzy, because there will be new inventory. And there is so much pent-up demand for new inventory. Everything that's out there right now, unless it just came on the market, it's still on the market for a reason. That they're kind of the wallflowers that nobody wants. I mean, obviously, if there was an incentive for people to purchase those properties, they would get, they would also get purchased. But there's so little inventory now that when we do get an increase in inventory, that will be rapidly absorbed because there is so much pent up demand.
Yeah. On this chart, when you would have want to have buy is when this market action index was the lowest it could possibly be. And when you would have wanted to have sold was when it was high as it possibly could be. Because when it's high, you have multiple offers, and when it's low, you have multiple properties to pick from. So clearly, October, November, December of last year would have been a great time to buy. You can go back and watch our update videos from May and June, July. We literally named these 4 months in numerous videos, numerous times. Mm-hmm. These exact 4 months said that would be the opportunity to buy, because we said by February, price start going up again, and no kidding, in February, the market started going up again. Now, we're not saying you should buy now. What we're saying is you should buy a house when it suits you, when you can afford it, when it's affordable for you. And if you find the house, buy the house. And if you don't find the house, don't buy the house. Wait and buy the house. I mean, just wait till the house comes on the market. But you cannot, quote unquote, time the real estate market, because then if you're trying to time the real estate market, everybody who bought after like 2010 and 11 is an absolute fool. Because in 2011, you should have bought your house. And you're probably saying, but I didn't live here in 2011. Or I didn't have enough money saved until 2013, right? There's no such thing as, because houses are transacted every day, right?
Or you were in middle school.
Yeah, houses transacted every day.
Right.
Okay, inventory. This is another one of those charts. People are looking at 21, 22, that inventory. Now remember, that bottom line is 1,000. It's not zero. But you can see where inventory is going. It is declining, and it's been declining since before November. I think the end of October, around the 20th of October, it started declining. That's when we saw the market shift. What's funny, Oana, is this is when interest rates were the highest. They were at 7.3. And as soon as the interest rates started dropping, immediately homes started selling. Like, right. People, I think, what do you think people said psychologically? Once they saw interest rates at 7.3 and they went below 7, what do you think people decided?
I think, well, the thing was a combination of things. One was that they had seen interest rates climb, and when interest rates pulled back a little bit, they said, you know what, I'm just going to go ahead and buy the house in case interest rates go back up. And then the other thing is people were already starting to adapt to the new interest rate environment. So I think it was a combination of things. Okay.
Here's the next chart, price per square foot. This is by market segment. The blue line is the top quarter of the market. So these are call them the $1 million homes, but I would say this is basically anything 800,000 and above, okay? And you can see that is more affected by seasonality. The prices, the homes sell for more money at a higher price in the spring versus the fall, okay? And most of the year-over-year price, if you look at that bottom 3/4 of the market and look at those little red, yellow, and green triangles, the market's the same as it was a year ago. The reason that we have the people screaming year over year is because the high-end homes took a look at that massive change in price that makes the overall market. But if you bought a house a year ago for a $320,000 rental house, it's probably still worth $320,000, and you probably got it, if you paid cash for it, you don't care what the interest rates were. And even if it's worth less, you don't care, because how much rent would you think would collect on it? Probably $2,000 a month, right?
Yeah.
So you'd have $24,000 a month. You'd have $24,000 in your pocket, and you wouldn't care what the value is, because you're still, as long as you get your rent, because you're not going to sell it in a year. No one buys a rental property to sell in a year. People buy rental properties to keep 5, 10, 20, 30 years, right?
Right. Yeah, I mean, there's too much cost in and out of the transaction, and real estate is a good place to put your money. You're getting appreciation, you're getting rent, life is good.
If you looked at this chart and just took away the blue at the top end of the market, this is pretty benign this is a price adjustment we said would happen, and that fact that homes have adjusted because interest rates went up, that's certainly a factor. Uncertainty, that's certainly a factor. But remember, this is just Las Vegas data. So what surprises me is that the high-end homes are starting to pop. I like every time we sell homes, the newer homes that come on the market are coming on for more money, and these things are actually transacting, right?
Right, they are. So it's really interesting because, and we've talked about this before. So generally speaking, we're looking at the high-end homes. For the most part, we're looking at $1 million and above homes, right? And you've got kind of this interesting dynamic. You've got the homes that are like between 1 and 2.5 that are struggling, and then homes that are 2.5 and above, they're doing fine.
They sell really fast.
They do, and you're kind of scratching your head, going, "What is that all about?" But there is something there, so it's kind of interesting to me.
Okay, this is the last one: median days on the market. Now, if you look at this chart, the dashed line is a 7-day average. The blue line lags because it's a 90-day average. As you can see, this whole chart, the dashed blue line is either above or below because it's leading the blue line. But the rapid change of this is pretty substantial. So that's what's interesting about this. You have a lot of people who decided they would sell their house if they could get their price, and they have their home listed for a long period of time. Okay, but you can see where this is going. Either they've taken the house off the market, so it's not counted anymore, or they've actually sold it. And then the homes that have been on the market a higher amount of time are disappearing, and they're being replaced with newer homes on the market, which have been on the market a shorter time. This thing looks like it's going straight down. It'll be interesting to see what this looks like in May.
Right.
Median days on the market. Like, this is a huge indicator. This also did not happen during the housing bust that we had. This is more like a housing big yawn. And this is why. Look, guys, home prices are up 40% in the last 3 years. Yeah, they're adjusting. Have wages gone up 30%? Not really. Demand is driving this. Inflation is driving this. Somebody made a comment on the blog about, or on the in the comments about, well, but it takes a long time for high interest rates to affect the market. No, it doesn't. It doesn't take a long time.
No,
when you originate the loan, if someone said, hey, you're going to go buy a house, it's 12%, you'd be like, forget that. It doesn't take a long time. It's not like it takes time for the 12% to build up. If anything, the more time that passes, the opposite happens because interest rates go down again.
Right. So not only that, but this conflicts with somebody said in a previous video when the interest rates went up and people had not locked in their rates, but they were under contract, and we saw a lot of buyers back out when interest rates spiked to 7%. So clearly, interest rates and buyer activity are very closely related as far as in time. So when interest rates spike, then there is an immediate buyer reaction.
Two interesting things have happened if you're sort of paying attention to what's been going on. Interest rates effectively went up on a pretty straight line basis from the beginning of 2022 to October, November. They just kept going up. Since then, they've pretty much been going down. They've going down in an up and down way, but they're trending downward. We actually, all of these peaks that you see was when interest rates were the highest. That clearly shows that when the rate is high, it chokes off demand. What's been really interesting is that this is happening in a year when there normally is softness in the market. Every single year, home prices decline in the fall. That's why we measure year over year. When they go, we had year over year 131 months of whatever, but remember, that's year over year. If you did 6 months, then every 6 months home prices go down because whatever you sold your house for in April, you're going to get less for it in the fall. And we have charts on this. We've done whole videos on this. That's why they do year over year. So the people that keep bashing the year over year last year are taking into account this mad rush of people to acquire a home. Plus you had all the iBuyers, institutional buyers still buying. So
this is really interesting because the institutional buyers, they're still out there, and mom and pop investors are still out there, and they are still buying. Even in this market, they are still buying. And it's to me, it's a very interesting dynamic because they have very little to choose from.
Right.
And sellers are not they're not having a fire sale on their house, right? So if they get their number, great. If they don't get their number, that's fine too. So it's an interesting dynamic. And the other interesting thing to me is that I'm seeing more investors come into the market, not less. I'm hearing from investors I've never heard from before. I mean, generally speaking, I've been around, a little while, right? And I kind of know everybody in town as far as investors. I've run across them at least a couple of times in my career, but now I'm seeing people that I've never seen before, and I think that's an interesting thing.
These are they still flipping?
They are still flipping. The other thing that's interesting to me is I'm getting inquiries from flippers in the $1 million range, and that I find very interesting.
They want to flip your $1 million listings.
They do, and I think that's really interesting.
Okay. Yeah, I don't have a bunch of $1 million listings, so I don't know about that.
So it's just interesting out there. Whenever I see a change in the market, that always kind of makes me perk up and say, "Hey, what's going on over here?"
Right now, my prediction: home prices will be less in the fall. Mm-hmm. The predictions are anywhere from up a couple percent to down 5%. That's what Zillow just came out with one. NAR had their prediction. One of the other big analytics firms came out. They're all somewhere in this up 2 to 3%, down 5%. Mm-hmm. One of them just came out. They were one of the really, really negative ones that predicted the 20% decline or something. And they just came out and said, oh, we predict 10% peak to trough nationally. 10% peak to trough. They also said in their super negative 10%, which if you're an investor, you don't care about, right? Because you're going to the Tesla stock about 5 years ago went down almost half at one point, right? But then it came back. So who cares? It's unrealized gains. It doesn't matter until you actually sell it. It's the same with a house. You don't really care. If you live in the house, you don't care. If you rent the house, you don't care. You don't care. The only time it matters is when you acquire the house and when you sell the house. But what I thought that was interesting was their prediction of this 10% peak to trough. But then they even acknowledged in the article, they said, don't wait to buy a house because there are some markets that are still going to keep going up.
Well, and even in markets that are declining, there are always pockets that do better than others. So.
Yeah, here's some fundamentals you need to understand. You could just forget about everything we showed you. You could forget this is Vegas data. This is what you need to understand. In the U.S. nationally, we have households being formed. Mm-hmm. This is either people get married, people leave, they go buy a house. It's a household being formed. At a faster rate than new home builders can build houses. So where do these people live, Oana? If you cannot buy a single family home, where do you live?
Well, you either live with family or you live in an apartment.
Okay. So if you're doing an apartment, what do people in apartments generally, some of them want to do at some point?
Most people in apartments, most people in general, whether they're in apartments or in living at home or whatever, they want to own their own home. They want to have that very basic security of having a roof of their own over their heads. Look, shelter is a primary human need, right?
Yeah. Here's the thing. American dream, own your own home. Mm-hmm. I can't tell you what's going to happen between now and the other end of this, whatever the other end is. All I know is this. The big factors I see, there's not enough single family homes. I don't like to buy anything that aren't single family homes. Everything we own is a single family home. I think they're the best investment you can make in any real estate, better than office, better than condos, better than anything. There's a massive shortage of them. Mm-hmm. And I like to be on the side of I hold a asset that is scarce because I believe a scarce asset in the future is worth more money. And then remember this, you don't really care. It's like those dividend stocks you buy. You get rent every month from it. You don't really care what the value is worth until you sell it. So I'm not saying you should run out and buy a house right now, rent an investment house, okay? You clearly have missed the boat on when it would have been a great time to buy investment house. It would have been any time prior probably to 2021, right?
Or anytime there's a good opportunity.
Anytime there's a good opportunity, regardless of what's going on in the market. I'll let you wrap up the whole video.
All right, so lots of charts. Hope you like them. We like charts. We like data. If you like charts, if you like data, if you enjoyed Todd's discourse, I do, please go ahead and like the video, subscribe, hit the notification bell so you'll get notified when we put out another great video. And we do actually have a video that we're going to share with you about rental properties. So if you're interested in rental properties, please subscribe because we've got a really good one coming up. We appreciate you watching. Please leave us a comment, and we will see you on the next video. Bye.
Bye.